shown that experts are poor at predictions and dart-throwing monkeys. Low-cost index funds, investments that track trader financial market indices outperform actively managed funds. Can you comment on that?
Yeah, a lot of experts aren't forecasters. They're experts with knowledge in their field, and they can analyse and tell you what's happened and why it's happened. But like you say, their skill is not forecasting. And obviously, what tends to happen is their field is so wide that they don't ever develop that expertise in forecasting. So, for example, if you think a weather forecaster, despite what we think about our weather forecasters, their expertise, their percentage of forecasts is very, very high. But it's a relatively narrow field. What's the weather going to be tomorrow? There are so many variables. And there's been a lot of research that says our ability to predict over and above a certain number of variables is extremely limited. I'm not sure where that variable number is. It's possibly 3. And beyond that, our ability to forecast seriously diminishes. And if you think about trading, there's literally hundreds of variables, possibly even thousands, that affect the price. It's just beyond human comprehension to know all of them. It's almost one of the reasons I like technical analysis, going back to that. I stick to one variable, pretty much, the price. And that makes it much easier for me. And I think, we've got a discussion going on my LinkedIn group at the moment, which is a very good discussion about prediction versus money management, which is more important. And pretty much everyone's coming up for money management, which almost goes back to what we discussed before. If you can just tilt that edge, and we're talking sometimes an edge of 49.51, 48.52 against you to 51, 49.52, 48 in your favour. We use the blackjack analogy and the people coming in. That's really a money management system they've got going there. Eliminate the bad trades, find the good ones, put your capital on those good ones. That's about money management.
So would you agree then that how do you get into the top 10% of your field? It's basically through money management?
It's many things. Money management is an absolute essential. If you're going to be consistently successful, that has to be big, very large up there. As I say, the research we're doing on personality is showing that the most successful personalities, both emotional and both the calm and logical type, are clustering close to a prudent personality as well, to having a degree of prudency, which suggests that they're organised, they have money management rules, they have strict risk management. So there is this tendency from the research we're finding that is seeing those clusters around those areas of success. It's not the only thing, of course. You need to have emotional balance. Even the emotional people who are successful, they are quite emotionally balanced. I think you need to have a high level of humility, self-awareness. Having a business-like approach as well is another very big thing. So I can think of one trader who, when we look at that personality profile, he actually doesn't tick many of the boxes of the more successful traders. He's very risk-seeking, possibly too risk-seeking if you were to just go by that. But he takes a real business approach to his work, sort of business-minded. So I think having a business-minded approach to your work is very important. Passion, that's a massive thing as well. So we talk about optimism. If you're passionate about something, you're more optimistic, you're more likely to find a pathway. Resilience, that's one of those words which we throw around quite liberally these days, but it really is important in trading to be resilient, to be able to sort of come back again from the knockdowns, because you get knocked down every day. So
quite a few things, yeah.
Yeah.
Not easy to become top 10%, I guess.
No. There's no overall one recipe.